Hey everyone, welcome back. Today we're doing a deep dive on Sterling and Wilson renewable energy. You want to know if they're a smart investment, and you send over a whole bunch of sources. We've got earnings call transcripts, investor presentations, even an auditor's report. Talk about a deep dive, right?
Yeah, we're going way beyond the headlines here. We're digging into their financials, their big wins, and yeah, those inevitable challenges. We're going to figure out if Swearell is really worth your hard-earned investment.
Okay, so let's unpack this whole thing. For those who are new to Swearell, picture this. It's 2011, solar energy is just kind of getting started, and this super ambitious company pops up in India. They specialize in actually building solar projects. It's called EPC.
Right. So they aren't actually making the solar panels themselves. They're the ones making those massive solar farms a reality, like handling everything, from engineering and getting all the materials to the actual construction.
And get this, their very first project was a turnkey EPC project. So they managed every single little detail from start to finish. Talk about ambitious rights.
Yeah, it takes guts.
And by 2013, they were already expanding internationally. This wasn't some little startup, just dipping their toes in the water.
No kidding. They were diving right in. And it seems like their gamble really paid off. Fast forward to 2015, they're the biggest solar EPC player in all of India. They even built the country's largest single-axis tracker plant.
What does that even mean?
It's a type of solar panel system that basically follows the sun throughout the day to maximize energy production. It's pretty cool stuff.
Okay, so we're talking cutting-edge technology here.
Exactly. And this plant was a 60-megawatt powerhouse. We're talking enough energy to power something like 48,000 homes.
Wow. So they were like catching a wave, riding that surge in solar energy, and they didn't stop there. They expanded into rooftop solar, started doing maintenance on existing solar farms, and then by 2019, bam, they're listed on both of India's major stock exchanges.
It was a meteoric rise. But here's where it gets even more interesting. In 2022, Reliance New Energy, a major player in the Indian energy sector, they swooped in and acquired a 40% stake in Swearell.
Now, that's not just some random investor grabbing some shares. That's a huge show of confidence from one of the giants in the energy industry, especially in a market as unpredictable as renewable energy, right?
You got it. It's a sign that they see massive potential in Swearell. And that potential, it's not just hype. It's backed up by some serious numbers. Just this year, they hit their highest ever unexecuted order value. It was over, get this, INR 10,500 crore. Basically, that's a massive backlog of projects they're already signed up for.
So we're talking billions of dollars here.
Yep. Serious money, even for the most seasoned investors. And it's not just in India. They've got offices in 28 countries. They've done projects in 20. This is a company with global ambitions.
They're young, they're growing like crazy, and they have this huge company backing them. Those are all really good signs for investors. But with any investment, there are always going to be challenges. It's not all sunshine and rainbows, right?
Never is, never is.
So let's dive into their financials a bit. Starting with their revenue growth. In the first quarter of fiscal year 2025, their consolidated revenue shot up by a massive 78% year-on-year. That's the kind of growth that gets investors excited, right?
Yeah, definitely eye-catching. But we have to understand what's driving that growth. Is it sustainable? Or are they relying on a few big projects in India? Looking at their order book seems like their home turf is crucial. A big chunk of their future revenue is coming from Indian EPC projects.
So it's like they're doing great in India, but they're also branching out.
Yeah,
Okay.
exactly. It's like they're trying to not put all their eggs in one basket,
Right. So they're killing it in India, but they are branching out. Like they recently got those 2 new turnkey orders in South Africa.
And then there's that huge deal they're trying to close in Nigeria.
Oh yeah, that one's a biggie.
We're talking a massive project to build 961 megawatts of solar power plants. And get this, they'd also be building battery storage systems.
Yeah, this is a really big deal. I mean, it shows they're not just sticking to the basics, right? They're looking towards the future of energy.
Absolutely.
But, gotta add a little caution here, this Nigerian project is still being negotiated. It's not a done deal yet.
Yeah, it's a potential game changer. Could really put them on the map internationally. But it's also a good reminder that, investing in a company like this means you're betting on their ability to handle these really complex deals.
It's a high-stakes game, no doubt. So we've got all this growth happening, but what about actual profitability? Looking at their margins, things are, well, a little less impressive.
Yeah, those margins definitely need a closer look.
Their gross margins are hovering around like 10%. Now, for an investor like you, that might not seem super exciting. especially in a hot sector like renewable energy, right?
You're right. 10% does seem kind of low.
Yeah.
But it is important to remember that EPC, it's a tough business, super competitive. These large-scale projects usually mean you're dealing with tighter margins.
Right.
Plus, SWREL is going up against some really big players in the industry.
So how do they stack up against those competitors? Like, what about Tata Power Solar? Are these margins just like the industry standard? Or are they lagging behind?
That's the question, isn't it? It's hard to say for sure without really digging into their competitors' financials, too. Got to compare the types of projects, factor in the regional differences, all of that. But what we can look at is their strategy, right? What are they doing to try and improve those numbers?
Okay, so what are they doing to boost their bottom line? Spill the beans.
Well, from listening to their earnings calls, they're definitely laser focused on becoming leaner and more efficient. They've been cutting down overhead costs, which, that could mean a healthier bottom line in the next few quarters. We'll see.
So even if their profit on each project is kind of small, they're trying to keep more of that money by being more efficient.
Exactly. Squeeze a little more out of each project and it adds up. And don't forget, they've got those higher margin services they're offering too. Maintaining existing solar farms, things like that. They're seeing margins closer to 25% on those.
It's like having a side hustle with a way better hourly rate.
Yeah.
Okay, but let's talk about the elephant in the room, debt. They're growing super fast, taking on these massive projects, and that usually means taking on some debt, right? How's their balance sheet looking? Be honest.
Debt's always something to be cautious about, for sure. Their latest financials do show an increase in debt, mostly because of a new loan they took from India's Renewable Energy Development Agency. IREDA, it's called.
Makes sense. They need money to fuel those big plans. But can they handle it?
So their total net debt as of September 2024 was INR 326 crore. That's a pretty big jump from the INR 116 crore it was back in March 2024. Something to watch for sure. But they've said publicly that they expect to cover a lot of their upcoming debt repayments with these indemnity proceeds.
Okay, so they've got a plan, but it's still a risk factor. And speaking of risks, what about those emphasis of matter paragraphs we saw in their auditor's report? Those always make me a little nervous.
Oh, yeah, those are like little red flags that auditors wave, saying, hey, investors, pay attention to this.
Exactly. What caught your eye?
Well, there's one about this indemnity agreement they have with the previous shareholders. It's basically like an insurance policy to protect SOAR-RL from certain losses. But the auditor's pointing out that actually getting those claims paid out, well, it could take up to 3 years. And there's a limit on how much they can actually get back.
So it's a safety net, but maybe not the most reliable one. And then there were those notes about the costs they had to swallow because of problems with a subcontractor. Remember that project where the subcontractor totally messed up, costing them a whopping INR 467.20 crore?
Ouch. Almost $500 million. Now, the management, they seem confident that they'll recover those costs. But litigation, it's unpredictable. Legal battles can drag on forever, really impact their financials, maybe even scare off some investors.
Exactly. And this whole thing just highlights how important a strong management team is, right? You need them to steer the ship through rough waters.
So let's shift gears a bit and talk about the people in charge. What's the story with Saileeu Ariel's leadership? Give us the inside scoop. Well, it's an interesting mix. You've got some real industry veterans and then some fresh faces, which can actually be a good thing. You've got that experience combined with some new ideas, new energy. They have definitely steered the company through some massive growth, snagged those huge contracts, handled that Reliance acquisition.
But remember that CFO who left earlier this year? That always makes me wonder about what's going on internally.
Yeah, that's never a good sign. We'll have to see how quickly and how effectively they fill that position. And if there's any more shuffling around at the top. Investors, they like to see stability, especially in a market as crazy as renewable energy. So what's the plan for the future? What's their big vision?
Yeah, where are they going with all of this?
Well, based on their investor presentations and earnings calls, they definitely want a bigger piece of the global pie. They're looking beyond India, setting their sights on those high-growth markets, places like Nigeria.
It's not just about being a big fish in a small pond anymore. It's about swimming with the sharks.
Exactly. And they're not stopping at just building solar farms either. They're exploring energy storage, hybrid solutions, even waste-to-energy projects.
Diversifying their portfolio, right?
Yeah.
Smart move to spread the risk and tap into new revenue streams. But managing all of that, those different businesses, each with their own hurdles, that's not easy.
Definitely not a walk in the park. Requires a clear vision, a solid plan, and flawless execution. So the question is, can SWRL's management team really pull it off? That remains to be seen.
That's what investors are going to be watching. Their ability to handle this complex and constantly changing landscape. That's what will determine their success. But it's not just about what's happening inside the company.
Nope, not even close. To really understand this, we've got to zoom out, look at the bigger picture. Think about the external factors that could impact Swirl, things they can't really control.
Okay, so let's talk about the wild world of global economics. Inflation, interest rate hikes, even that scary R word, recession, all of that can really impact a company like Square.
Absolutely. For example, rising interest rates mean borrowing money gets more expensive, right? That could hurt their ability to finance new projects, maybe even refinance that existing debt we were talking about.
And if inflation doesn't ease up, it can shrink their profit margins if they can't pass those rising costs down the line. It's a real juggling act.
No doubt about it.
Yeah.
And let's not forget about currency fluctuations, too. Swear Alel operates all over the world, and those exchange rates, those can be unpredictable.
It's like a roller coaster you can't get off.
Exactly. A strong dollar sounds good, but it can actually hurt their profits when they have to convert earnings from other currencies. It's a lot to manage.
It sounds like a lot to manage.
It is. So yeah, while we see all this potential for growth, investors really need to pay attention to how these big picture factors play out. It can make all the difference.
It's like they're on this tightrope, and there are all these external factors that could make them wobble. But it's not all doom and gloom out there. We also have to consider the global push for clean energy, right? Governments all over the world are ditching fossil fuels, and that's creating a huge demand for renewable energy, which obviously is good news for a company like Renewable.
Yeah, it's like a tailwind pushing them along. But, and there's always a but, right? This green wave is attracting a lot of surfers. Competition is getting fierce with new players jumping in all the time. That could squeeze those margins even more.
So it's not enough to just ride the wave. They have to outperform the competition.
Exactly. And on top of that, you've got the super fast pace of technology in the solar industry. New, more efficient technologies are popping up all the time. Things change fast.
So they can't just rest on their laurels. They have to innovate and stay ahead of the game.
Exactly. If they want to stay competitive, they have to be investing in research and development. They've got to be ready to adapt to those new technologies as they come out. Otherwise, they risk becoming obsolete.
It's like that saying, innovate or evaporate.
Exactly. And let's not forget about those global supply chain issues that have been causing so many problems lately. Remember the great toilet paper shortage of 2020?
Who could forget? Those were dark times.
Those disruptions can really mess things up, you know? Project delays, cost overruns, even forcing companies to renegotiate contracts. And when you're talking about massive solar farms, those delays can get really expensive, really fast.
So how are they dealing with that?
Well, it seems like Solarel's been pretty proactive about mitigating those risks. They've been diversifying their suppliers, building stronger relationships with key partners, and they're even looking into local manufacturing.
So less reliance on those long, easily disrupted supply chains. Makes sense.
It's all about being adaptable and having backup plans, you know? But even with the best plans, things happen. Unforeseen challenges pop up. That's just the nature of the business. Investing in a company like Solarel, it's all about weighing the potential rewards against those inherent risks.
It's a balancing act, for sure. But that's what we're here for, right? To help you make sense of it all. So we've looked at Sweario's growth story, their financials, who they're up against, even those risks that make you nervous. But there's one more piece of this puzzle we need to look at. Their cash flow.
Cash flow. The lifeblood of any business, really. You can have amazing revenue growth, a ton of orders lined up, but if the cash isn't flowing, well, that spells trouble.
It's like that saying, right? Revenue is vanity, profit is sanity, but cash flow is king. So how's Sweario's cash flow looking? Give it to us straight.
Their recent reports show they've had positive EBITDA for several quarters in a row.
Okay, hold on, back up a sec. EBITDA, for those of us who don't speak accountant.
Right. EBITDA, it basically means their core operations are making money. It's a good sign, definitely.
So they're not just bringing in cash, they're actually making a profit from their main business activities.
Okay, got it. But EBITDA is just one piece of the puzzle, right? What about their free cash flow? That's the cash they've got left over after paying for stuff like new equipment and expansion. You're right, free cash flow is key. It shows how much wiggle room they have to, go after new opportunities, pay down that debt we talked about, maybe even give some back to investors as dividends. To really get a handle on their free cash flow situation, we need to look at their cash flow statement. It tracks how cash moves in and out of the company.
Okay, so we put on our financial detective hats, we examine the cash flow statement. What kind of clues do we find?
Well, one thing that jumps out is their working capital cycle. Basically, how well are they managing their short-term assets and liabilities? Looking at their latest balance sheet, they've got negative working capital. Essentially, they're using short-term borrowing to fund some of their operations.
So they owe more money in the short term than they have on hand.
That's the gist of it, yeah. It's not a huge red flag necessarily. It's manageable, especially if their collections are running smoothly and projects stay on schedule. But if there are any hiccups, well, that could put a real strain on their cash flow. And then there's their capital expenditures to think about, all that money they're putting into new projects and expanding.
Those big, exciting projects like that one in Nigeria.
Exactly. Those require a ton of upfront cash, and it might be a while before they actually start seeing any revenue. They have to manage that outflow of cash really carefully, make sure it doesn't drain everything coming in.
It's a tightrope walk, isn't it? Balancing those big growth ambitions with, not running out of money. Speaking of balancing, let's talk ESG. It's not just about the numbers these days, right? Investors want to know about a company's impact on the world around them. Environment, social responsibility, how well they're governed. How does Swear Our Eel measure up on the ESG front?
Well, environmentally, they're in a good spot. Their entire business model is renewable energy, helping reduce carbon emissions. Investors who are concerned about climate change, that's a big plus.
They're practically saving the planet. But what about the social and governance stuff? How are they doing on that front?
That's where things get a little less clear. I mean, they haven't been involved in any big ESG scandals or anything like that, but there's definitely room for improvement, especially when it comes to transparency and sharing information, particularly around social issues.
Okay, so they're saying the right things about sustainability, but are they actually doing it? What could they be doing better?
For starters, they could be much more open about their labor practices. How are they treating their workers? How are they working with the communities where they operate? What are they doing to make sure human rights are being respected throughout their supply chain? Investors want to see proof, not just words.
Actions speak louder, right? Show us the receipts.
Exactly. And on the governance side, a more diverse board of directors would be a good look. Stronger protections for whistleblowers, maybe a little more transparency around how much the executives are making. Those things matter to investors who are thinking long term.
It's like building a house, right?
Yeah.
You need a strong foundation on all sides, not just a pretty facade.
Couldn't have said it better myself. And for investors who are really serious about ESG, you've got to look deeper. Is this company actually willing to adapt and improve? That's the real question.
So here we are. We've climbed to the top of this mountain of information about Sterling and Wilson Renewable Energy. Financials, growth, competition, risk, ESG. We covered it all. What's the verdict? What do we tell our investors?
Sterling and Wilson Renewable Energy, they're like that promising startup that's growing up fast. They've got a lot going for them, a great track record in an industry that's exploding, big plans for expansion, and that commitment to renewable energy. Investors love that.
But, and there's always a but, right, they're growing fast, and that always comes with some growing pains. Those margins are still pretty tight, that debt load is getting bigger, and they've got to navigate that crazy global economy we talked about. Plus, the technology is constantly evolving, so no time to sit back and relax.
And let's not forget about the importance of leadership. Swear management team, they're going to be the key to whether this company sinks or swims. Can they steer the ship through choppy waters and really capitalize on all the opportunities out there?
That's the million-dollar question.
Yeah.
We've laid out all the pieces of the puzzle. Now it's up to you to decide. Does Sterling and Wilson Renewable Energy belong in your investment portfolio? Do your own research, weigh those risks and rewards, and as always, happy investing.